Here we go. Welcome back to Liberty and Finance. We're delighted to have this returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us, as he does almost every Tuesday, for this weekly market update. Andy, thanks for joining us this Tuesday, December 27th, 2022.
Donegan, it's great to be here, buddy. Happy holidays to you, your family, and everybody out there.
Absolutely. Thank you, everyone. All you loyal subscribers and viewers for watching and for being there with us tonight. I apologize. This technical glitch we've had that caused a late start. We're 8 minutes late starting due to me not knowing how to use these technical tools properly. But now we got it rolling. Hope everybody can see and hear us. And we're looking for questions in the live chat on YouTube. If you want to participate in the live chat, make sure you go to YouTube, click on the live premiere. And if you haven't subscribed, you got to subscribe so you can get into the live chat. And then you can post your questions for Andy. Andy, this may be our last time together. I guess it is probably this year. So grateful that we've had these weekly market updates all year. If people are wondering about my background here, we're at a hotel near the rim of the Grand Canyon on our way home from visiting children and grandchildren in Arizona. And I noticed one of the questions that was asked, Andy, people are really getting concerned more than ever before, I think, about the potential of government nationalization or confiscation. I know we talked about that a little bit in the past, but people are wondering if you are aware of any strategic differences from security standpoint between storage locations located either in Utah or Minnesota, or excuse me, South Dakota or Florida, when it comes to that question of potential nationalization in the future? Or are we all grasping at hypotheticals because we really don't know what hijinks the government might play in the future, and we're trying to do the best we can?
Yeah, I mean, look, I always think it's best. First of all, it's good to be here, of course, as usual. And I love our Tuesdays together. It's like it's something that I look very forward to every week. So anyway, it's good to be here. And yeah, look, it's always best done again to hold your metal yourself, to be your own vault, to be a midnight gardener, burying it in your backyard, to hide it wherever you see fit. When you talk about storing it in a vault or nationalization, I mean, desperate governments do desperate things. It's easy to let your mind wander to the recesses of that dark place. Sorry about that. Knock it off, you guys.
Different kind of technical difficulties there. Yeah.
Yeah. Knock it off. Anyways, look, bottom line is this, is that I have often felt that the nationalization of gold and silver, the way that it was confiscated in 1933, is really off the table, at least in my mind. It represents, as we've talked about, such a minuscule part of the entire asset picture here in the United States. I'm so sorry. I apologize about that. Knock it off. Anyways, bottom line is I don't think that they would go into the I love it. Sorry, my wife to the rescue.
Oh, thank you.
Anyways, I wouldn't think that they would come into the vaults and nationalize assets, nationalize precious metals for people when it represents such a minuscule part of the asset allocation of the entire financial matrix. In 1933, when gold was confiscated, just like the pictures behind me show, that's the executive order back there in Roosevelt who confiscated gold. When that happened, gold and silver were integral parts of everyday life. They were currency. While they still may be legal tender, if you're talking about the American Eagle or the Buffalo or the US minted coins, they're not currency. And so taking metal from the American public, I think, would be very counterproductive. It would usher in unintended consequences where if our creditors feared that type of nationalization of assets, I think you would see an all-out deluge of dumping of dollars of US treasuries and a complete and total loss of any semblance of trust that is still left. Look, There are sometimes you have to hold it in a depository, like if it's in an IRA. But one of the best parts of the precious metals IRA, done again, is the ability to take possession of it. So the bottom line is simply this: hold it yourself, hope for the best, prepare for the worst. We represent but a very small, as I'm often fond of saying, the pimple on the elephant's rear end, a very small, minuscule piece of the asset picture. Those of us who own precious metals, I think the unintended consequences would not be worth the very small take that they would make. If that ever happens, it's basically checkmate. At that point, you have to wonder, is it better to operate within a black market than it is to acquiesce if things get that bad, where the government is nationalizing assets directly from the US public? So no, I don't notice really any place better than the other. I guess you could say, if you're talking geographics, yeah, maybe Salt Lake City or North Dakota would be better than the outskirts of the country on the two coasts, to be in the center of the state, or of the country. But look, if a decree is made, a decree is made. And let's just hope it doesn't come to that. I've often thought about this, and I really can't wrap my head around the fact that they would come in and confiscate gold and silver from what would represent such a small portion of the public.
So there's a question here about, again, on the theme of confiscation. We'll beat this just long enough till we don't have to. Does Andy believe that it's necessary to buy old coins for the sake of safety from confiscation? Greg Austin says no real reason to buy old coins for the sake of safety from confiscation.
Yeah, I mean, I buy old coins because I like them. And I think the companies, and there are a few out there with very polished spokespeople, and they talk about confiscation being something that should be your singular priority when you're accumulating metal. I think that is disingenuous. Myself, I would not buy the pre-60 or the pre-33 gold simply based upon the confiscatory aspects of it. Look, I buy the pre-33 gold because I love it. In 2017, I was screaming to everyone who would listen to me on these podcasts: if you own gold eagles, trade them for pre-33 gold coins. You could trade a 1 ounce gold eagle in 2017, when no one was buying any gold, straight up for an MS-63 $20 Liberty and not lose any gold. I've never seen that before. But now we're at a period of time where the premiums make you have to, think twice about it. For me, buying the pre-33 gold was more a function of something that I loved. I mean, a piece of history, a piece of Americana, something that made people think for a moment, like, wow, that's pretty much incredible. Most people don't know that gold was money prior to 1933. Heck, there was just a poll done that 30% of the country still thinks that the US dollar is backed by gold. So most people have never seen a gold coin, let alone a pre-33 gold coin. And when I started in this industry in 1990, no one bought gold bullion. When you had gold at $300 an ounce and a $20 gold piece at $350, an American Eagle at $320 or $325, no one bought gold bullion. Everyone bought the pre-33. It's what everyone owned. It's what I owned predominantly for the first 20 years of my career. And then somewhere around 2007, 2008, right before Obama took office, the perceived threat of confiscation became so acute that the premiums on numismatics went parabolic. And much like the gold to silver ratio right now, Dunnigan, what has defined the biggest trades of my career is identifying and exploiting price anomalies. When we were seeing a 60, 70, 80% premium on common date MS62, 3, 4 coins, I told everyone that would listen to me, you need to sell your numismatics and go back into bullion. And I flew all around the country for 3 years, buying back everyone's numismatics, selling it to the 4 or 5 auction galleries that I thought were as dumb as a mud wall. And it actually proved to be that way because the premiums collapsed. Anytime you see something so distorted in price anomaly or in price ratios, it's an anomaly, like the gold to silver ratio, like the numismatics were in 08. Now, by 2017, they had come all the way down, as markets typically do. In a pendulum, they go from fair value to overvalue, back through fair value to undervalue. And I would think we're kind of on the way back up again, where I'm not going to buy these coins simply because I'm concerned about confiscation. I think in the end, it's about number of ounces that matter. Now, when you were having some technical difficulties, I was able to say hello to some of the people in the live chat. I can't have it open on my computer screen because I hear you and I can't hear both. But one of the questions I saw was someone asking, should I feel bad about buying silver eagles and junk silver? Look, I've been consistent about this for a long time. I was saying the same thing to you and everyone out there for the last 2 years. Don't buy them. They're too expensive. It's about number of ounces that matter. Now, yes, in a perfect world, we buy American issued coins because a lot of people perceive the safety in American coins, whether they be new or old, against any type of governmental shenanigans. But here again, in the end, I've always felt they'll take the ETFs. You have the largest stockpile of silver in the world and the third or fourth largest stockpile of gold in the world, and the ETF set being GLD and SLV, held by HSBC Bank in the case of GLD, and SLV is held by JP Morgan. So you have the cartel crooked banks managing these massive stockpiles of gold and silver that don't allow for all us common folk to take possession of the metal. So they could close those two funds on a Friday night, immediately transfer all of the money at the closing rate into your money market, and look at the world and say, what? We didn't confiscate or activate eminent domain. You're free to buy physical metal in this country. We just closed a couple of the ETFs, which don't allow physical possession by you anyway. Mm-hmm. It's a way for them to have their cake and eat it too without the global backlash. I think here again, we can all wonder what these, you look at what's his name up north there in Canada, who, usurped the rule of law and due process and froze people's accounts. You look at governments who will do these things and you start to get scared. I get it. We're kind of on the fringe, us people who don't believe that the road to retirement is always paved with stock certificates and mutual funds and dollars. And you wonder, am I a target? Look, I think you're the pimple on the elephant. You're unnoticed. And for the government to come in and do that would really be a big statement to the world. And I think one that they would not be eager to make unless they were completely and totally out of options.
We've got questions about the direction that premiums are heading. You brought up how premiums have a life of their own. Sometimes numismatic premiums decouple from bullion premiums. The question is, let me go back there right now. The question is from Eric Hoffner. Andy, are premiums still going down?
Yeah, I've never seen anything like it. And in 30 years, the volatility in the premiums are extraordinary. Now, let me caveat this. There's a whole field of economic theory. It's called wave theory, Elliott wave, Kondratiev wave. These are based upon human emotions. And, when I talk to people in the industry, I've been doing this long enough where I have a lot of friends in the industry who are competitors, but friends. And, we talk a lot. And the entire industry, since really the second week in November, fell asleep. And I attribute that honestly to the way that I look at the world myself, being that, I had my whole family and my wife's whole family here. I had 25 people in my house for Thanksgiving. I had my wife's whole family, like 11 people staying in our house over Thanksgiving. And, for 2 years, they wouldn't come. And I think there's something to that where people were just excited to get out, to enjoy the holidays, to watch football, to have turkey and some beers and hang with their family, to go on ski trips, to do whatever the hell it is, but not worry about COVID outbreaks. And I think that had something to do with people just unwinding and unplugging. It's something that I've tried to do really since Thanksgiving, and I've kind of done it. But if it were me, that's the way that I would look at things, that I just want to unplug and forget. And so the whole industry kind of relaxed. Now, what that has done is allowed companies like me to stock up on product because it came at the exact same time as the new allocations come out. And the big distributors who have obligations to take massive allocations from the sovereign mints are then going to fire sale anything that they have in their vaults. And so the premiums have collapsed. Now, the interesting thing about that, then again, is that I don't see that as being anything rational, in the respect that a little bit of a slowdown and the premiums just come cratering down, what happens if things get right back to where they were here the first, second, third week in January? Honestly, I would have to say this is as sweet of a spot as I've seen since 2020. They're the lowest premiums I have seen since 2020. And it happened out of the clear blue because a month ago, getting product was next to impossible. And as we talked about on your show last week, a lot of the items that we are selling now, we're selling at a loss, and people, have a hard time understanding that. But it's, when I'm buying product 8, 10, 12 weeks in advance and agreeing to pay a premium to these distributors, I'm not going to go back to them and say, can we renegotiate that premium because they're now lower? No, it was an agreed upon deal. Price could have gone higher. Premiums could have gone higher. Mm-hmm. So that's the way that it goes in this industry. There's risk on both sides of the table. Your risk, our risk. Our risk is the same as yours in many respects, only, we're talking buying 20, 30, $40 million worth and selling it at a slight loss because premiums have come down. You can't sell them at these high premiums or you won't be competitive. Now, I could hold it and make the assumption that the premiums will rise, and I'm assuming they will, but that's not smart business either. So any way you look at it, this is a very unusual time where typically when you see great volatility, whether it be in any market, it precedes some sort of a blow off. And I would simply say to you, honestly, that this is as good of a time as I've seen in 3 years to add to a portfolio, and nothing's changed. If anything, the world's gotten crazier by the day.
The other part of the retail price that people know how this goes together, it's the spot price, and then there's a premium on top of the spot price, and that's your retail price when you're buying or when you're selling metals. And it's funny, if any of you haven't heard Rich Dad, Poor Dad author, when he gets in there and talking about his experience as a Marine in Vietnam, it's quite illuminating to hear him explain going behind enemy lines on a chopper with his buddies to try to buy some gold. He'd never bought gold before. He go to this little village, and he's finally gets to this old lady who's selling the gold. This is Robert Kiyosaki, and he says at the end, he says, "Okay, can I get a discount?" And she looks up at him. She says, "What are you talking about? Spot is spot." Right. And it's all over the world. Spot is spot. So that's what I thought going into this. And then as a broker, I found out that clients were asking, why do different dealers seem to sometimes have different spot prices? And they're asking, what's the basis of that? I'm trying to find the question here. I keep doing this wrong thing of scrolling off the page here because it keeps moving. But the question was asked by a questioner here. How does Miles Franklin come up with their spot price, and how is it that different dealers will have different spot prices? How is that possible?
You'll typically see, if you compare our spot price to the major retailers, we're less across the board. The reason, and maybe 10 cents on silver, maybe $1 or $2 on gold. Could I say that they're padding their prices? Maybe, maybe not. Because the way that it works, it's kind of like a special sauce. You have to take the most actively traded front month futures contract and then backtrack for time. It's a switch, it's basically called. And what formula you use to backtrack to where we are in relation to the forward trading spot future month, you come up with the current spot price. And by and large, it shouldn't be more of a variance in 5 or 10 cents on silver and $1 or $2 max on gold. There is no exact way of doing it because it is the futures price that you would see on COMEX, and then you have to backtrack it when you try to figure out the exact spot price. So there's a little bit of a formula involved, and everyone's formula can be slightly different. But when you compare the spot prices, you'll find that we are typically going to be about 5 to 10 cents less on silver than everybody. And I've noticed that myself, the major retailers, and $1 or $2 less on gold. And it's not a science, but it should be very, very, very close nonetheless.
One more tip that is not obvious at all, it wasn't to me for years, is that there's a difference, as always, when it's a live market between bid and ask. I mean, that's true for any stocks. If you go to look at any stocks, you can see the bid, which is all the willing buyers are saying, you know, I'm willing to pay this much. And then there's the ask, which is willing sellers, but usually there's a gap between the two. And until someone's willing to come across and say, okay, I'll pay your ask, or okay, I'll sell you for the bid, or meet in the middle somewhere, which might be a last trade that's neither at the bid or the ask, you don't get any trades because there's a difference there. And there has to be people willing to come across in order for there to be trades. One of the things that's not obvious is a lot of the data feeds you might find for live charts of spot price for gold and silver may be fed from someplace like Kitco or others. And those by default are showing you the bid. The bid is the lower of the prices, which is of no use to people who are trying to buy metals.
It makes zero sense.
If 90% of the people right now are trying to buy metals, they care about the ask, not the bid.
It makes zero sense that they do that. I don't understand it. And, you know, then they'll say, well, I show it's, you know, 23.87. No, it's not. It's $24. What do you mean? No, you're looking at the bid price, and then you have to. It makes no sense that the feed that Kitco pushes is the bid price, and that is true. And also, you can talk about placing an order over the weekend. You know, the market sleeps from Friday at 5 o'clock or 6 o'clock Eastern until roughly the same time on Sunday, 6 o'clock Eastern, and it sleeps. And so that's the only time when it's not alive. And then it opens back up in Asia around 6 p.m. Eastern on Sunday. So if I'm doing a trade in that window, you'll find typically that the dealers will add another 10 cents to silver or another few dollars to gold because they're taking the risk that the market pops open like that. This was a phenomena we saw over silver squeeze in 2021, where we had heard that something was going to happen, and we bought like I don't know, seven futures contracts in silver over the weekend, which would have put us long 35,000 ounces. Before Saturday morning even rolled along, we had sold like 60,000 ounces, and we were naked exposed at that point, then 25,000 ounces to the open. And when the market opened, by the grace of God, it didn't open up $10 or $20 like people thought. It gapped up $1.50, cost us 40 grand, like that. And so there's a lot involved in hedging and using spot and locking things in. It's not as straightforward as people think. And there's risk involved in anything in life. And whether it be us securing the product, hedging it, or selling it over a weekend, or, you know, any of the myriad of things, buying coins that have a high premium, and then before you even receive them across the Atlantic Ocean, the premiums have come down. This is just par for the course. But look, you ain't seen anything yet. That's all I got to say. It doesn't bother me because I know that we haven't seen a damn thing yet. And when rates accentuate themselves and get high enough to really start to rattle the markets and or the Fed and their policy decisions, you will see people in the mainstream wake up to an alternative, because, you know, everyone who's wealthy in this country, by and large, has an allocation of stocks and bonds and real estate, and it's worked well until it doesn't. And they haven't thought of alternatives. They've had no reason to until they do. And that's when everything that I've seen and talk about happens. I have a curse of seeing things too far ahead. I mean, it's just logic. All I got to do is put logic to this. And when you look at what the rest of the world is doing right now, de-dollarizing, it's just an inevitability. The question is when. And these pullbacks in premium, in price, in rhetoric, these are all opportunities if you see the big picture. At least that's the way I look at the big picture.
We also have had a lot of concern about clients, concern about government reporting, government scrutiny, bank scrutiny. I can't tell you how many questions every week from clients saying, gee, what if I go over the $10,000 limit? Will my purchase be reported? Or if I buy more than a certain amount, will my purchase be reported? If I live in California and I buy more than a certain amount, will my purchase be reported? And we have to keep reminding people that Miles Franklin never, and dealers are not mandated to report sales. So we can sell any amount of metals to anybody in any state, and there's no mandated reporting. There is some confusion then about, we've talked about this before, 1099B reporting when we buy back from clients certain quantities of certain products. But there's also new concerns coming out about, well, why are the banks asking more questions than they used to ask? And there was a new one that came up this week. It was new to me. And that was somebody saying that in the new 2023 1040 form, there's a question about, do you own any gold or silver? And is this new intrusion and new snooping by the government? I looked it up. I could not find any references to that. So if anybody has a reference to that or a link to an actual IRS document, please email it to me at libertyandfinance@protonmail.com. What I did find was a lot of articles from various financial advice sites telling you about capital gains taxes and how you can, if you don't want to pay the 28% collectibles capital gains tax on owning physical precious metals, then just buy an ETF that doesn't allow you to take physical possession. And then you can treat it like a stock and hold it for more than 12 months and all this stuff, and that'll solve all your problems. So can you address that question about new intrusive questions, whether you've heard about any from either the government, from banks, the IRS, about reporting? That's number one. And number two, if people really do want to own physical precious metals, is there any tax smart way to do it, knowing that we're not tax advisors?
Well, the banks have been getting worse and worse and worse. And on a big picture, look at it from the bank's perspective. And I don't know if you want to even take it further and say that the government is all over them and telling them that they need to do this. Maybe that's part of it. But, the banks right now in this, look, we've ended a 40-year trend. We are ending a 40-year trend of declining interest rates, and that's being replaced with rising interest rates. And the banks are starting to rein in credit. You're seeing over $2 trillion in the reverse repo market. The banks don't want to lend money out into the system. They'd rather leave it at the Fed earning next, 4% with safety rather than lend it out to you or I for a car payment or a home equity loan or whatever it may be. And we're seeing a sea change with bankers where in mass psychology, where greed for profits and lending is being replaced with caution and fear. So that's the way that they're looking. They're concerned, but they're also concerned about losing depositors. And when I did that very large deal in July, it took a woman 4 days to get $50 million taken out of her bank account. That's what she wanted me to tell everyone, that, look, it's a lot easier to deposit 50 million than it is to get it out. And I'm a big client. And so the banks are concerned about losing money, and they want to know, where are you putting your money? Well, none of your damn business. But I think more than anything, they're just very concerned about, people pulling their money out of a banking system that's over leveraged, that's paying nothing. Even though rates are rising, we haven't seen any of that move over into checking and savings accounts. They're still next to nothing. So people look at the risk associated, the systemic risk. They look at something like FTX. They look at these dominoes that could fall, and they say, well, I'm leaving my money in a bank where FDIC insurance is woefully undercapitalized, and and I'm getting nothing in return, so I'm going to pull my money out. Well, the banks don't like that so much, and they're inquisitive. Have I heard of anything that is new? No. I mean, I told the story of, I had two $2,000 checks, and I went to the bank and I wanted all $20 bills. And the lady said, well, that'll be a very big stack. I said, yeah, that's okay. I'm okay with it. And she said, well, what are you going to do with it? And it took everything I had to not really go off, and just, I wanted to so badly, but I didn't. I said, I got a plan for it. And you could see she spent 4 minutes typing something out, basically saying I'm a drug dealer or whatever it was that she was putting in her suspicious activity report form, the SARS form. It's just the world we live in, I guess, right now. And it's decreasing privacy. It's a world where privacy is something that is fleeting. And one of the things that I enjoy the most about my metals is that no one knows what I have. I don't even really know exactly what I have. And I think that, you could call it a loophole. Now, as far as a legal loophole, where there's still a way to legally have some privacy, because when you buy it, the only loss in privacy in buying metal is writing out a check or sending a wire. Is that a loss in privacy? Maybe, maybe not. I don't know. It disappears. And then the metal is buried somewhere in your backyard. You got to try to find, I don't remember where I put it. I'll figure it out. It's there somewhere. The point of it is that, no, it's one of the last few things that give you privacy in a world of diminished privacy, increased litigation. And at this point, no, we have no obligation to report anything unless someone pays us with more than $10,000 in multiple money orders or in green money, $20 bills, $100 bills. Short of that, you could spend $100 million or $50 million in the case of someone we worked with, and there's no reporting whatsoever. And it's one of the few things left in this world where you can say that.
We've got questions from people talking about the relative, we thought we were done, we're not, about premiums. Relative premiums between, for example, platinum versus silver versus gold, but also between high premium and low premium coins. So if you look at silver coins, right now the premiums on American Eagles are higher than the premiums on silver maples. That's normal, but it's been more than usual in the last year or two. The question is, if silver spot price goes way up, do we expect that the premium difference to scale? Chris 1234 says, if silver spot were 100, will an eagle still be worth more than a maple?
You know, the way I used to look at it would be, no, it would announce as an ounce at that point. You know, all I can tell you is that for the last 3 years, the premium on silver eagles has been detached from everything else. It has been as much as 2 to 3 times of everything else. And there are people out there who truly believe that. Now, I'm not saying this is what I believe. I'm just saying that there are people that believe this, that if the government were to intervene, that American issued coins and bars would be sheltered from a future confiscation, and it would be other items that would be confiscated. Now, I've talked about this. This was something that Jim Sinclair talked about publicly. I don't have a problem in saying it. I went to dinner with Jim one night, and he told me this, that he had heard from someone that he trusted that was, you know, very, very connected, that there'd be 2 resets. That the first, you could argue we're in the midst of, would be man-made. The second would be won by Mother Nature. And when that happened, metals that weren't American in origin would be confiscated. Now, I own a lot of metals that are not American in origin. Although I know he believes this, I had not been motivated to this point to do that, to trade my Canadian Mint 100-ounce bars or my Royal Canadian Mint gold coins for American Eagles. I could, but I haven't, because of the big premium discrepancy. So there are people who believe that. Maybe that's part of it. I don't know. What I do know is that the US Mint made about 1/3 as many silver eagles as they have the ability to do. They made somewhere in the neighborhood of 14, 15 million. I've seen them make 40 and 50 million myself. So what does that mean? Janet Yellen said they ramped up silver production. Sure didn't look that way to me. Is there something nefarious behind it? There are people who think that there is. There are people who think that they'll issue a gold and silver backed system, and these coins are being minted and hoarded by the US government. I don't know what to believe anymore when we talk about the US Mint, because they really have been, look, they've made they're a big part of my career. Being a US Mint authorized representative, a reseller, is something that has defined my career in many respects. But they've been very disappointing in the way that they have provided gold and silver to the US public. And here we are today, where the premiums on everything have come down, and we're still double digit on silver eagles, or real darn close to it. I haven't looked yet this evening, but here again, you know, there are just some people who want American made coins and bars. And I don't know what premium will do when the price gets that high. I would simply say this: when the price gets that high, maybe everyone in this country will wake up and will do whatever they can to buy precious metals. Because look, there are no inversely correlated assets anymore to the US stock market or the dollar besides precious metals. And if we see problems in the markets, which I believe we will, the only inversely correlated asset, according to Ibbotson, and you have this, you can send it to people, the article on Ibbotson, is gold and silver. It's precious metals. It is a hedge against the lunacy of our Federal Reserve, of our government, and the distortions that were created by the irresponsible monetary policies that we've seen over the last 3 years. And so you buy gold and silver whatever you can. And this is why I've told people, don't pay the extra premium for the eagles. Look, if I had my druthers, that's all I'd buy. But when it comes at the expense of so much in the way of ounces, it's a mistake. If money isn't an issue, yeah, buy Eagles, buy $20 gold pieces, buy Morgan silver dollars. I mean, I would if money wasn't an issue. But if you're looking to get a position into silver and gold and get the biggest bang for the buck, you won't find it right now and for the last 3 years in anything with an American stamp on it.
This question has come up before, and we just hinted at it a minute ago, but I'm going to ask it again. And when you're done, I'm going to tell people that they can email us for a link to a document around this. But Slick Willie asks, how much can someone sell before Miles Franklin reports it to the IRS?
You can sell anything you want. We won't report it. There are only a few things that trigger dealer reporting. So if you're selling gold, in coins, there are 3 coins that trigger dealer reporting on the 25th ounce in one sale. Krugerrands, Maple Leafs, Mexican 50 pesos. That's it. You sell me 24 ounces, I don't have to report it. I don't want you to tell me you have 100 ounces and you plan on selling 4 separate tranches to avoid reporting. You just call me and tell me you need to sell 24 ounces today. And you can call me tomorrow and say the same thing, and 4 days later and say the same thing, and the day after that, the same thing. In gold bars, it's a kilo, anything a kilo or bigger, 32.15 ounces. So sell me 32 bars at a time. I don't need your social security number. I won't report it. And that is in one transaction. You can't send me 100 bars and have me sell 32 at a time, but I can sell 32 1-ounce gold bars as often as you'd like and 24 Krugerrands as often as you'd like. That's it. In silver, it's so the American Eagle or the Maple Leaf, any of the sovereign coins will not trigger dealer reporting on silver, ever. The only things that will trigger dealer reporting in silver would be pre-65 silver, junk silver, in quantities in excess of $1,000 face value. 10,000 dimes, 4,000 quarters, 2,000 halves, any combination that equals 1,000 face, which is 715 ounces. You sell anything under that amount in one transaction, don't need it. Don't tell me how much you got, but tell me you need to sell more. And then under 3/4 of a bag today, half a bag tomorrow, 3/4 the next day, 900 face the next day. That's all legal. These are legal ways of exploiting the law to your benefit, walking all the way to the edge of legality, looking over it, not stepping over it. Also in silver would be bars or rounds. So generic rounds, the Buffalo round, any of the silver rounds that don't have a legal tender face on it. So, you know, the Krugerrand, the Maple, the Kangaroo, the Philharmonic, the Britannia, the Eagle, those are all exempt from dealer reporting. But a round or a bar in excess of 1,000 ounces, need your social. Anything under, I don't. So that's it. Nothing else will trigger dealer reporting. And our job is to tell you what the law is, not how to evade it. We can show you how to legally avoid paying taxes. We won't show you how to evade paying taxes, but to legally avoid them and do it the right way, all we have to do is tell you what the law is and leave it up to you from that point. But look, if you exceed 1,000 ounces in bar or round form, if you exceed 1,000 face in junk silver, if you exceed 24 ounces in Krugerrands or Maples or 50 pesos, or exceed a kilo in gold bars, I'm going to need your social. I'm going to file a 1099 because we do things by the book. But if you're looking on how to maximize your privacy, then arm yourself with what the law says you can do and go from there.
So folks, if you want that list in writing, we're happy to email that to you. Just email us at libertyandfinance@protonmail.com. That's libertyandfinance, all spelled out, no punctuation, at protonmail.com. And just put the term 1099 in the title of the email, put your name inside, we'll reply back and make sure that you get a link to a document we created, which includes the full table of all those products that Andy mentioned, both by metal, because it's different for silver versus gold, by product type, and by weight in a single transaction. And you should be well set. Let's see if we have any more questions here before we got to wrap up, because we're getting short on time here. Let's see. What are the questions people have? You mentioned privacy, and we've talked about it from a couple different directions. Any other thoughts about ways that Miles Franklin helps people to protect their privacy?
Well, you know, I mean, I don't even know how to answer that. I mean,
Well,
privacy
one of the things that we've talked about in the past is the uninteresting packaging on the shipping, that kind of thing, that nothing is going to raise anything, or the multi-layered insurance method used on the shipping, that kind of thing.
Yeah, I mean, the privacy has been the cornerstone of our business since day one. We started in the Swiss annuity business in 1989 and Swiss francs, and you know, privacy is the cornerstone of what the Swiss stand for, always have anyway. And it's the same thing here when you're talking Swiss francs or precious metals. People want privacy inherently, and we understand that. So you bring up a good point in the way that we ship things. So when we send a package, it's in a very nondescript box. It doesn't say Miles Franklin on the outside. Typically, it has the name of our vault manager as the from, and it will say something like Chris Olson on it, but it won't have any identifying markings on it. And we insure it through UPS. Let's say it's a $5,000 package of Silver Eagles. We will insure it maybe for $150 and do adult signature required, so that the UPS driver takes special care of that package that's minimalistically insured with adult signature required, won't throw it in the back of his truck the way he might with the Amazon cargo that he has. And then Lloyd's of London and Travelers Insurance Company and others have programs that mesh with the UPS tracking software so that it is fully insured until it is signed for, but even the driver has no idea that a package that has no identifying markings is packaged exquisitely well. You need an ice pick or a jackhammer to open it up, and is insured supplementally for the real value. Those are the things that we will try to do to enhance privacy. It's a big deal. Privacy is something that I just take for granted. I live in a community, a golf community in Florida. I've met a lot of people and done business with some of them who have approached me. A couple of them watched these podcasts before I even knew who they were. It was kind of funny, but I don't even tell any of the other people, their friends. I mean, I don't even think twice about it. Privacy is something we take very seriously, and everyone should. And that goes both ways. You know, you want to show someone how cool this is, but loose lips sink ships, and I think it's just important to realize that privacy is very, very, very important when you're safeguarding your precious metals. And all it takes is one wrong person to hear one wrong thing, and yeah, it's a big deal done again, and something that we don't take lightly. Can't hear you.
My fault. Before we wrap, we almost forgot, we have a weekly special to announce. So if you could let people know what you've got cooking for them this week, and I'll try to get a picture of it up while you do.
Yeah, I think it's the 2022 Australian kangaroos for $4.25 over the price of silver. They come in boxes of 250. They're the only sovereign mint coin that comes in mini mint boxes of 250. Like the Canadian maple leaf, they're the only other modern minted coin that is 4 nines, 9999. They're the purest silver coins in the world. They're lovely. They're conveniently packaged. Most mint boxes weigh 40 to 44 pounds. These weigh about 20 pounds. My 15-year-old daughter could carry one easily. So if you're looking for the purest silver coin in the world in a very conveniently packaged box that allows you to have a sealed box at half the price of everything else at the lowest premium I've seen them at in 3 years, this is for you. 2022 sealed boxes of kangaroos. They also come in tubes of 25. There's no order minimum. And I guess that'll be the last special of 2022 for us.
Well, sorry I didn't get the graphics up in time, but thanks for describing that for everyone. We'll be happy to take your calls at 888-81-LIBERTY. If you get a chance, give us a ring. We're covering a lot of hours of the day, not in the middle of the night, but pretty much all the other hours. So be happy to help you out both late nights and on weekends. And we've been grateful, as always, Andy, for your presence here with us. As always, there's more questions than I had time to Answer, Sarge 27271. I really wanted to get a monster box. My budget is $58.75 Canadian.
God. Yeah, well, you know what? You can still buy a couple of ounces, and anything is better than nothing. And look, I've been buying something every 2 weeks for 33 years, and I have never missed a 2 week period ever. As I've said, that was a promise to my father when we started this company. There have been many 2 weeks where I spent $50. Whatever it is, it's adding to the stash. And as I hope people understand, I'm dead serious and sincere about that. There's no order minimum. And I think where we are heading, anything that you could do to add to your stash is going to be, it's going to be well received. And look, when we talk about silver, the bottom line is that it's been controlled and kept too low for too long, and it's greatly distorted the real supply demand fundamentals in the real price. And look, in 2021, India will have imported about 4,500 tons of silver. That was, in 2021. In 2022, their numbers are up to 8,000. So you have 8,000 tons, that is. You have countries that are accumulating vast amounts of silver. You have the exchanges being bled down to their lowest levels ever. 80% drawdown in registered supply on the COMEX since silver squeeze, the lowest levels in recorded history on the LME. That is betraying anything else. The biggest money in the world has been using the price suppression to de-dollarize. And it's not just gold, it's silver too. So I think when it breaks, even a couple ounces are going to be a whole lot better than the $55 that he has, now. And I mean that sincerely. So no order minimum, whatever people want, we're happy to help them any way we can.
Excellent. Well, Andy, thanks for joining us again. Sorry, everyone, that we had some technical glitches on my part that delayed our start, but glad we were able to share this time together. Thank you each for hanging out with us. So many of these premieres throughout the year. We had been publishing 7 times a week for most of the year. This last month here in December, we went to 6 times a week, keeping Sundays for families. And just so grateful for everyone's presence here. Andy, you've been part of that every week with us. Our community of subscribers just passed 80,000 in the past week.
Congratulations, and well-deserved. And again, well-deserved. And I'm honored to be here. And I think 2023 is going to be a crazy year. It's going to be the year of the bricks. And this has been my thing for 2 years. And I started talking about it with you more than anyone. And there's a lot that we're going to cover in 2023. This is going to be a very pivotal year for the United States and for everyone out there who's paying attention. So to you, to everyone out there, I wish you a heartfelt, sincere Happy New Year, and make it a good one. Be safe, be healthy, be nice to each other. And I will look forward to coming back with a new, hopefully revitalization after a couple days of just unplugging. So this is going to probably be my last podcast for 2022, but I will be back in 2023, and together I'm sure we'll navigate what is going to be, I think, a very interesting year. The Chinese curse, may you live in interesting times. I think these are going to be very interesting times. Like it hasn't been interesting already. I think buckle up. I think you ain't seen anything yet, if I had to guess.
Yeah, we had some comments in the video, in the chat stream earlier before we got started, saying that they think that in 2023, we'll look back at 2022 as the good old days. So we'll see. Remember that each day is a gift, so make the most of it. And thank you everyone for being here. Each and every one of you makes the difference. So make sure you spread the word. Remember to like, subscribe, and share this video, and we'll build that community even wider so we can help more people. Andy, thanks for joining us.
You bet, Dunnigan. Stay well, buddy.